Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. SolarEdge has had a rough go of it recently. The stock is down over 50% in just the last few months, and there may be more pain ahead. But I have three predictions for the company where at least operations are going to go in the near future. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. It really helps out the show. And to kind of set the stage for SolarEdge and the company where it's sitting from a valuation standpoint, because I think that's important, on a trailing 12-month basis, shares are trading for 27 times earnings. Enterprise value to sales is 2.0. So I wouldn't call this a value stock. Given the way that the company has grown over the past half decade or decade, I think a lot of investors consider this a growth stock. Now, there is one reason that I think SolarEdge is going to continue to grow revenue. That's my first prediction. And that is that the battery business is actually what's going to keep SolarEdge growing in 2024 and beyond. Batteries are actually a relatively expensive piece of a solar installation if it's installed. And with new rules in California and net energy metering 3.0, there's actually much more incentive to install batteries with a solar system. I think that will ultimately spread not only in the US, but also around the world. Every company is trying to add batteries, adds a little bit of incremental margin and incremental revenue. SolarEdge is going to be a beneficiary of that. The downside is the batteries are not typically very high margin. And given the fact that SolarEdge was already making inverters and power optimizers, they already kind of controlled that brains of the system segment where a lot of value is accruing. And so I don't think this is going to be a high value adder for them. The second prediction is that volumes are actually going to fall not only this year, but next year as well. And the biggest reason for that is higher interest rates. Solar installations, whether they're on someone's roof or whether it's a utility scale installation, are really a financing project. You spend a vast majority of the money up front, and then the energy production, whether that's cost savings from a utility bill or whether there's direct revenue to the project, that revenue is accrued over 20, 30, 40, 50 years potentially. The challenge is the higher interest rates are, the less valuable those cash flows are in out years. So the more pressure you're going to put on not only the viability of the project making sense at all, but the upfront costs in general. So we have heard already from some of the biggest solar installers in the US, and we have seen from results from every company. Every company is talking about this, that volumes are really going to be challenged because the economics of solar installations just aren't as good as they were even a few months ago. So not only are volumes going to fall, but my third prediction, and this is going to be the hardest for the company and the stock, is that margins are going to compress. You may not realize that the inverter or the power optimizer has actually become the most expensive part of a solar installation, particularly for rooftop installations. The solar panel itself has been effectively commoditized. So there's not a lot of margins there. They're relatively low cost. There's ample supply. So the value has accrued to what customers and installers interact with. That's the optimizer, the inverter, that brains of the system that I mentioned earlier. But now as they're having a harder time justifying those installations from a financial perspective, where are they going to turn to put pressure on their suppliers and try to lower their own costs? Well, the place that makes the most sense and the place where there's the most margin is companies like SolarEdge. So I think we're going to see a lot of margin compression that will hurt not only margins, but also the bottom line or net income. So that price to earnings multiple that I mentioned earlier of 27 is actually on fairly high margins in the past that may actually get a little bit worse. So that's why I think that this is going to be a challenging year for SolarEdge. And that goes for a lot of the other solar companies as well. It's not just something that's affecting SolarEdge, it's affecting everybody. But what do you think about the idea that batteries are a revenue tailwind, but industry dynamics are both a volume and a margin headwind? Love to hear your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.